Hello everyone. In this fine hour I'll try to show you a couple of psychological pitfalls and how we are lying to ourselves. Not lying, but deluding ourselves, and this is no other than our inability to look objectively at price charts. Well, here's the thing. Price charts are nothing more than price representation on the chart line and nothing more, but we have tendency to make any kinds of wizardry and imaginary things which are simply not there. We are skewing prices, skewing some indicators in the way that fits our narrative. Simply we are saying that something is overbought or oversold, and some indicator on chart says that there are indications that prices will go either to some direction, but truth to be told is it's not anything close to that, and in most cases they don't mean a thing. These are just fluctuations, and we tend to justify our positions by finding data that would help our narrative. Here is one example. Let's take Bitcoin, because Bitcoin has relatively good examples of price consistency. As we could see here, from early to mid-June, prices were relatively stable right up until today, which is late December of 2022. Well, what does it say? One might argue the prices are very stable because they have been staying flat for months, for half month. There is nothing actually happens. Yes, there are some fluctuations, but they are negligible. Oh, is it true or is it not true? Well, here we see that prices are relatively stable. Let's check it out in higher time frames. How does it look? Whether my previous narrative will stand? Yes. Larger time frame says that we are at the same levels which we were in the summer, and chartist will say that we are somewhere at the range. Although I could even draw some sort of trend lines here, that here is some sort of resistance line going straight here to, I think, here, and that someone will say that here is some important signal, because if prices will breach this resistance line, they will increase or they will continue their downtrend. I don't know whether it's true, but some chartists will claim something like that. Well, let's see another example whether this stands true. You see, I just opened 4-hour chart in TradingView. It seems that we are spectacularly stable, but are we? Let's see. I'm just framing this chart in the different view, and what I am seeing here, I could twist this chart like that and we will actually don't understand everything. It would look like a mess. If someone would open this chart without much of experience or context, he will think that this is some sort of bad painting or something like that, but actually this is the same price with the same indicators and same everything that was before, but I simply changed the time frame and changed the frame a bit, so it looks like that. For me it looks completely chaotic, and I don't know what to do here, and probably you would too, but if I make it a bit more properly, you could see this. You could argue, actually I would say one might argue that in this chart, as we see here, one might argue that prices are stable only from early November till late December. And this was some sort of other level which we crossed weeks before, and doesn't have any relevance to do that. Well, while I was saying in previous video, we had some large trend line with support and resistance lines which indicated downtrend. Now here we simply see flat price line with nothing. We have like one support, which is, I don't know where, somewhere here, and that's it. There is nothing absolutely interesting. What might one argue? But if I probably skew the chart somehow more interestingly, I could find some narrative somewhere. I would say simply yes, that the market has breached the trend line, and we simply have to wait for some indication that markets will go somewhere or similar nonsense. But what I'm trying to say here I'm trying to say that we could take one chart and even go to smaller time frame here, whether we could find something in like 30-minute chart. We could go to 30-minute chart. Yes, unfortunately there is nothing interesting for Bitcoin here. We could see that we have some other patterns as well. Yes, here we see that we have a small uptrend with some sort of wedge pattern which broke out there, and then we have like spike which indicated uptrend, and now we had one downtrend which reverted to previous trend line or something like that. We could see that we have pattern. We had one wedge which broke to upside, then it started some sort of downtrend pattern which reverted to previous trend. This is in 30-minute chart. But when we went to daily chart, as it was noted in previous example, we see entirely different picture. We see that markets are staying flat and there is long downtrend. And question is, which trend line is more important one? Which support and resistance line you should ignore and which you should have to pay serious attention? Well, there probably could be as many opinions as there are chartists who are claiming that their ways of reading charts are better, but I would say you should complete all of them, because as you see, I took 3 or 4 completely different pictures out of one market with the same live data, with the same times. I took daily chart, 4-hour chart and 30-minute chart, and you could see that one was long-term price development of Bitcoin, second in the beginning looked like abstract art with complete chaos there, and in 30 minutes you probably would have very difficult time to see whether there is any relations to larger Bitcoin chart if you didn't know that it was Bitcoin. So what I'm saying here is that you could take one asset class with identical price movements and make out of them completely different pictures with completely different outcomes and narratives, and that would simply do nothing good for you in trading, because trading is not about trying to chart out or figure out what charts are doing. That is useless, and that hasn't have any real life advantages to trading, investing, or any kind of discipline in financial markets. In financial markets you have to manage your risk, maximize your winners, cut your losers, and know how to manage your risk and your psychology. You don't have to try to forecast markets, because you cannot forecast markets, because as I just said, out of charts you could make any kind of figure, pattern and indicator what you like. And here's the thing, there are actually many analyses which stated that chart reading has no real indications of future price movements. They're almost random, at least in short term, and you cannot rely on those patterns while making money. I hope I got you the message with those simple examples, and you could see that if you look at the charts long enough, you could see anything there. And don't be fooled by this delusion. Stay focused on your risk management and trading psychology, and bye.